Exercise 710 asks us to compare all three common methods of depreciation. Straight line, as you know, is the most common. And what you do is you take the acquisition price of the asset, $29,500. We're told that the bottom of page 359. We subtract what we think it's going to be worth when we're done, the salvage value. That gives us $26,000 as the total depreciation we're going to take over 10 years. So each year our depreciation expense is going to be a debit to depreciation expense and a credit to accumulated depreciation. Now, the double declining balance method, you do not consider the salvage value. So we're going to take the full book value at the beginning of the year, $29,500. Now the book says 2/10. It works in this problem. I need you to understand that 1/10 is 10%, and since this is double declining balance, we're going to multiply that by 2. And altogether, that's going to give us our 0.20 or 20%. So we multiply that times 2, 0.2, 20%, that's our 2/10, and that gives us 5,900. Now keep in mind, at the end, no matter what, when we have to stop, when we get to 3,500, and we're going to have the same amount of depreciation no matter what method we use. The only difference is that with double declining balance, we'll get more at the beginning and less towards the end. Okay? And the last one is the activity based, and we take the 29,500, subtract the 3,500 just like we did with straight line, divide that by the 13,000 hours that they told us they expect, they guess, they hope, they think they might use. No guarantee. And at that rate, they expect, they guess, they hope, they believe. Whatever term of uncertainty you want to use, that's what they're doing. So that's 26,000 divided by 13,000. That's $2 per service hour. And during the year, they had 1,700 service hours. That number was given to us. So we have the 1,700 hours given to us times the $2 that we computed. So our depreciation for that year is 3,400. The straight line method will give us the same amount of depreciation every year. The declining balance method will give us less depreciation every year until the very end, and the activity-based method will give us only the depreciation based on how much we use the asset that year.